Four Fed chairs teaming up to kind of go after the Trump administration in a veiled hit there. What are your thoughts on that op-ed?
This is a big deal, and I think this is enough of the criticism. Think of the four former Fed chairs that came out and spoke and signed this article, Sully. These are the four horsemen, to evoke a little Notre Dame football there for you early in the morning. These are the four horsemen of central bankers that have really come to the defense of Jerome Powell. And defense of Jerome Powell, you may not agree with what he's done with the recent cut, but at the end of the day, he has not lashed back. He has not retaliated in any of the comments publicly. So I think all this criticism that's been put forth towards Fed Powell in a very interesting moment in time, I think it's unwarranted, and therefore he has his back being covered by former chairs. But think about it. The whole article is talking about we don't need to be checked by the President of the United States. We need to be checked by Congress. And I agree with that fact that the Fed chair should and only be checked by Congress.
Okay, let's talk about this market yesterday, a 767-point drop. You know, we're off the lows, I guess. We're down 950 at one point. Volatility spiking. But to your point, the VIX is not at 50. What do you make of yesterday's action? The start of something a little more worrisome, or maybe sort of a semi-normal, healthy couple percent correction in what has been a strong year for stocks, Jeff?
Well, we've become so conditioned to what is a normal little pullback. When we see the velocity, we talk a lot here in the floor in Chicago about the velocity of the moves. We saw velocity in the 10-year note, that yield dropping. But the movement we saw, the pressure, the selling of equities, I think it was pretty normal. And it was taken in stride. Yes, we did see a very technical trade. We violated that 50-day moving average. Pick your indices, so if it was the NASDAQ, if it was the S&P 500, as soon as that 50-day moving average was violated, we broke down to that 200-day moving average. And I think that comes into a lot of repositioning, but there is a lot of concern. This is a little bit different in this moment in time because this currency war, we've really seen the gloves be taken off. And now there are some full-blown jabs and roundhouses being thrown. But I think this is just all part of the negotiation. This is healthy. Doesn't feel healthy when you see markets move to the extent they have, when you see Apple down over 5%. But at the end of the day, this is healthy, and this is part of the process, which gets us closer to a resolution in my mind.
And I know you still like the XLU and the TLT. By the way, those are fancy ETFs for utilities and U.S. Treasury bonds. I mean, you're hiding in a bunker, Jeff. Is that really the best place for our viewers' money? Those are the safest of the safe havens.
Well, ever since we saw volatility come out in Q4 2018, XLU or the utility sector was highlighted on our relative strength metrics. But yes, owning treasuries has been a winning thing. And we've talked about on your show on Worldwide Exchange when the 10-year is at 255, this was a time to own it. Not because of all the moving parts with the Fed. It was because how the 10-year note lined up against the cross of the universe. When you see that German bond, we have $14 trillion in negative yield. That yield still even at 175, 180 in the 10-year. United States-wise, is still kind of juicy. But I do like technology. We've owned tech sector. If you look at the XLK, there's still a reason to add here. There's just so much emotion. But if you look at like a Microsoft, or let's look at XLK. XLK is the broad swath technology ETF. Even though that had just a rough day yesterday, we're still up nearly 28% year to date. So I think you have to embrace all the noise right now. But remember, the economy is in great shape. Earnings season. Are we still in earnings season? Let's talk about earnings season. We're having some beats here. So I think there's still reason to be positive. But there's just so much emotion. You have to find a way to mute it. So
it is, because all the political headlines out there as well. Trade wars, currency war, the gloves are off.